Now we will see some examples of revenue recognition for a government entity. Remember, those revenues include mostly taxes, and we saw the classifications, either direct tax revenues or imposed non-exchange revenues, or any government mandated non-exchange transaction, or any voluntary type of transactions. And remember, all these are non-exchange because the moment the governmental entity is recording those revenues is not the moment that they are providing the equal service. So here, let's see an example of derived tax revenues. So derived tax revenues examples include very common income tax and sales tax. So when an individual actually earns income, that means at that moment, a tax payable is created from that individual's perspective. That means I'm working for this university, I'm getting my paycheck, no matter how much it's deducted for my tax purposes, but I'm owing to the government to pay tax. So at the same time, tax receivable is created from governmental side. So these derived tax revenues are basically based on some type of exchanges, either this type of like earnings based or sales based. So sales tax is another example. So I'll show you how it should be recorded, and remember those will be recorded by government wide financial statements. So I'm taking you to page number 760, and it is an example of sales tax. So the business operating within a locality, the total amount of sales is 100 million and the tax rate is 4%. So how they're gonna record it? So apparently when all those business organizations they're making sales, they are at the same time they're obligated to pay tax to the government, and governments will expect to receive those tax. So 4% means 4 million that will be collected by the government. So the government wide financial statement will record these transactions, which is sales tax receivables, and here they will also credit sales tax revenues. Now we will see another example, which is actually an example of imposed non-exchange revenue. So one pure example is the property tax or any type of fines or penalties. So here we will see the example from this textbook, and you will see, assume that on October 1st, year one, property tax assessment is 530,000 for any governmental entity, and that's they call it City of Alvan. So they mailed those tax assessments to its citizens, and that is actually for the year two, but they mailed it in year one, and they will actually, according to their state law, they cannot claim this tax until it's year two. So they also have one provision: if any citizen would make any early payment, they will pay 5% discount if they receive any payment in year one. So now here, when they just mailed those tax assessments to their citizens, they will not record any entry, but here they will see what happened in year one. But definitely these tax they will use in year two. But what happened because of this 5% discount, few citizens actually paid tax. So they paid $30,000 tax, and because of this 5% discount in year one, the collection is 28,500. That means after you deduct this 5%. So how it will be recorded. Remember, this tax will be used in year two. So in year one, when they receive those tax, although that a discounted amount, it is they cannot claim it as a revenue. It's kind of an unearned revenue type of thing. So what the government wide statement and fund financial statement will record, they will debit cash, which is 28,500, and they will credit unavailable property tax collections. This is the special account title they're gonna use it. Remember, it is they cannot show it as a tax revenue because they cannot use it until year two. Now, here, what happened? In here, they actually also assess that these these tax 500,000. Initially, it was 530. They collected 30,000 in year one, and they're expecting to collect the remainder, which is 500,000. But they're also assuming that 4% of those will not be collected. That means they will be able to collect 96%, which is 480,000. That means it is actually an uncollectible tax. It's kind of bad debt type of things. It allows for uncollectible tax that remaining 4% tax of these 500,000 they will not be able to collect. So now what happened in year two, here they will basically record this entire 500,000 amount as their tax receivable, and definitely they will show it as their tax revenues. But remember, a portion of it, which is 20,000, they will not be able to collect, so they will show it as an allowance for uncollectible tax. Now, here, what happened previously, they actually showed this collection as an unavailable property tax collection, which is just like an unearned revenues. But now it is year two, they can use those tax monies. So they will remove this unavailable property tax collection, and they will show it as a real tax revenue in year two. So now let's see the government-wide financial statements journal entry in year two. So in year two, the entire amount which they want to expect, the remainder 500,000, they will record it as tax receivables, and they will be able to collect 480, and they cannot collect that, they will not be able to collect this 20,000. So this is kind of um, allowance for doubtful account type of thing. So they call it allowance for uncollectible taxes, and they will credit revenues for 80,000. And again, since they already collected a portion with the discounted amount, which is 28,500, they recorded in year one. So now they will show it as real tax revenues. So they will credit year tax revenues 28,500, and in year one it was kind of an unearned type of thing, so they credited that time unavailable property tax collection, so they will remove that account, so they will debit it. And this is actually government wide financial statements. Now for fund financial statements, how it will look like. So they have a little twist. They actually added a little more information for fund financial statements. So here, remember again, fund financial statement focuses only on current year, and they found that these 500,000 out of those 500,000, if you remove those uncollectible amount, that means 20,000, you have you are expecting to record this 480 as your tax revenues, but they found that here these out of these 30,000 will be collected in year three, and that is actually after 60 days in year three. So they will split it. So when they are doing it in year two, they cannot use this $30,000 money, which will be collected in like in year three and after 60 days after starting year three. So they will also show it is an unavailable property tax collection. So this is a little different than your government-wide financial statement. So again, so they will show the entire amount that they are expecting to get in year two, which is 500,000 as tax receivables. They will remove the part that they are not able to collect, which is 4% or 20,000. Now, out of that 480, 30,000 they cannot collect in year two. They will collect in year three, and it's after 60 days in year three. So they cannot use this 30,000 money basically. Since fund financial statement is current focus, so these 30,000 will not show as that year two's revenues. So they will credit it as unavailable property tax collection. Now, for the part that you received in year one, basically government-wide and fund financial statement, they treat it in equal way. So they will remove that unavailable property tax collection. This is no longer like an unavailable or unearned. Now they will record it as a real revenue. So this is how the governmental entity, both for fund financial and government wide financial statement, will actually record these tax revenues. And we just saw two examples, sales tax and another is property tax. And from two classifications, those are major revenue sources, derived tax revenue, and another is imposed non-exchange revenues. Now we will see a couple other items. One is about the bonds. So governmental entity can issue bonds, but remember these bonds are not a source of their revenues, but of course those are source of their monies, right? So this is a major source of financing any fund or any activities for any state or local government. So we will see how those type of transactions will be recorded. So here first we'll see that when the government will issue a bond, how they will actually record it. So basically they are receiving cash. So now let's look at fund financial statement. They will actually debit cash because they issued bonds. So they are receiving this $15 million, and they will credit it as a financing source, other financing source, bond proceeds. Remember, they actually don't record a liability. Again, the idea for fund financial statement is like current year focus. You will just show it how much cash is increased or your resources increased or decreased. But on the other hand, if you think of a government-wide financial statement, they will show it as a bond payable. So definitely they will debit cash, and government-wide financial statement will credit as bonds payable. Now, how about the payment? When they have to pay the bond amount and the interest, how they're gonna do it? So let's make it very simple. Assume that, forget about the amortization tables or anything. Assume that they are repaying their bond amount, an amount for a certain year, and they are actually paying 500,000 bond principals amount, and they are also paying $10,000 interest. So the government-wide financial statement will remove that bond payable part. They're paying their liabilities and this 500,000, and then they will debit interest expense 10,000, and they are paying cash. So altogether 510 they credit it. Now on the other hand, fund financial statements, they will show both of these payments, but remember they actually don't create any liability, which is we call like bond payable. So they will show both payment as expenditures. So these 500,000, they will also call it an expenditure. Well, they will label it bond principal. And these 10,000, they will also show it as an expenditure, and they will call it interest, and definitely they will credit cash. So far you saw a few examples how to record revenues and another major source for any government, which is bond proceeds. Next we'll see a little bit of inter-fund transactions, and again I'll show you it from this textbook chapter. Now we will see some journal entry examples that are related to inter-fund transactions. So remember when you have this type of monetary transactions, those are usually from the general funds. And first we'll focus on within governmental funds. So when this type of transactions are within the governmental funds, then you have to use two specific accounts. You have to look at the money is going out from which fund, then they will show it as other financing uses transfer out. And then on the other hand, you have to show which fund is getting that money. So for that fund which is receiving the money is actually it is a transfer in. So basically we will report those as other financing sources. or other financing use. So let's see an example. Here, a city council, they decided that they will transfer $800,000 from the general fund to a capital project fund to cover a portion of the cost of a new school building. So the money is given by the general fund. Money is coming from the general fund and it is given to the capital project fund. So remember, both are within governmental funds. So now how they're gonna record it? So general fund, this is actually a transfer out. So they will debit other financing uses transfer out, and they will also label it. It's for capital projects funds, and then they have to pay it. So they will record it as a payable. So they will credit due to a capital project fund. So they are basically showing it that they are giving this money transfer out, and it is because of this capital project fund, which is payable to capital project. So this is actually the general funds perspective. Now here, if you look at the capital projects funds perspective, they are receiving the funds. So it is a receivable. Right now we are assuming no cash is really transacted at this moment. They are just recording it as they just decided they will do this transfer. So capital project fund, for capital projects fund, it's a transfer in. So they are actually expecting to receive it. So it's a receivable for them. So they will due from general fund or receivables, and they will credit other financing resources transfer in. They will also label from where they are receiving this money. Now remember, we are showing it all for fund financial statements, and since both funds, general fund and capital projects fund, both are within the governmental fund, that's why you don't need to do for government-wide financial statements. If you have any transfer between a governmental and the enterprise or business type of funds, then you have to show it both in your fund financial statement and government-wide financial statement. Now we will see another examples like this. So here they say that here the money they want to transfer a money. Assume that a city set aside here $20 million for of unsigned money to help permanently finance a new subway system that will be open to the public. So we are assuming for convenience it is actually a cash. We are assuming that the cash is transferred. So we will show it as a cash transaction. Now remember, this fund, this 20 million, the city is giving from the general fund to construct the subway, and subway is actually a business type or enterprise fund, right? So this is the transactions between the governmental and the business type. So that is why we have to record it for both fund financial statements and government-wide financial statements. So now let's see how it will look like within fund financial statements. Again, fund financial statement usually shows it as other financing users. So general fund, they are giving money. So they will debit this transfer out. Transfer out is kind of an expenditure. We cannot call it an expenditure, but it is their resources going out. So this is an use of the fund. So other financing users transfer out. They will also level. It is given because of the subway system, 20 million, and we assume that just for simplicity, cash is transacted right away. They're giving cash right away, so they credited cash. On the other hand, enterprise fund will show it that they are receiving cash, and they will show it as a capital contributions. They don't need to show from which fund they're getting it to them. This is actually a capital contribution. Now, this is the fund financial statement. But as I mentioned that these transactions or these transfer actually happen between the governmental and the enterprise or business type. So government-wide financial statement will also record that. Remember the government-wide financial statements, which is the whole government entities financial statements. and we classify everything into two categories: governmental, which is mostly like governmental funds, and business type, which is mostly like enterprise type of fund. So here, the government-wide financial statement will record it under their governmental activity column. They will show this is transfer out, they are giving it away to subway system, so it is debited and cash credited. On the other hand, business type activity will show this is a cash receipt, so they will debit cash and they will credit it as transfer in from the general fund. Now we will see few other exchange transaction, internal exchange transactions, but it could be within the governmental funds or governmental um, and enterprise or business type of funds. So now here, these type of transactions are a little bit different, because these type of transaction you will see that there is kind of some service is involved. So these type of transfers are made within a government, and those are kind of the transactions that are treated that would be kind of done by other outside party. For examples, city, they want to pay its own print shop for some services, so that could be treated as some type of payment, that if they would not use their own print shop, they may have to do it with some outside vendors. Now we will see one example, and remember, if you have these type of examples where those type of activities could be with outside parties, then you have to treat them as revenues and expenses. So let's see this example here. They have actually two examples, that a city government, they pays its print shop, and we are assuming this is an internal service fund within the governmental funds. So they paid $15,000 for the police department. And then they are making another payment, $6,000, to a toll road systems for their fire department vehicles. So look at these two transactions here. One is within governmental funds. We assume that internal service fund is within governmental, and another is between the governmental and the enterprise funds. So for fund financial statement, since that could be done by the third parties, so they will treat it as an expenditures and revenues. So for the general fund, they are actually giving it, those are coming, most of the cases you will see that those monies are transferred from the general fund. So general fund, they are making this expenditure, printing for 15,000, and toll road expenditure 6,000, and they are paying cash $21,000. On the other hand, internal service fund, which the belongs the print shop, they actually are receiving these 15,000 for their printing services, and they will record it as a revenue, as if they are providing service to a third party. Now, for these toll road sites, look at the enterprise funds, as if they are giving service to any public and any third party, and they are receiving their toll revenues. So this payment, that another $6,000, which is coming from the general fund, and the government is actually paid for toll for the fire department vehicles. So enterprise fund will treat it as a regular revenue. So they will debit cash, they will credit revenue. Now remember, here you have two transactions. One is within the governmental entities, which is this printing shop payment. Another is between the governmental fund and the enterprise fund. So since the second one, which is for the toll road payment, this is between the governmental and the enterprise or business type of activities. So the government wide financial statement will show that. So for the governmental activities, they are paying these toll amounts. So they will show it as an expense, toll road, and debit and cash credit. On the other hand, business type of activities, they are receiving it as a toll revenue. So they will debit cash and they will credit revenues. So these are the examples, few journal entries. So I would request you to go over the PowerPoint slides and especially read the textbook chapters because these are a little bit different and apparently it may seem a little bit clumsy or complicated, but the more you will be reading and the more you will be practicing, we have two journal entry problems, then you will feel better. So overall, we discussed how to record the revenues and from the government-wide financial statements, we showed how it should be recorded by the fund financial statement and government-wide financial statements, the issuance of bond or the payment of bonds, and then we saw a few examples that relates to inter-fund transactions. What if it is all within the governmental fund or it is between the governmental and business type or enterprise funds. So I request you please read the chapter and practice the chapter 8 problem.